What's up, everybody? The markets are crashing. What do we do about it? Oh, we realize there's opportunity brewing. We got some things in the charts that we got to look at that will help give us a little bit of comfort about what's going on. Let me know. Did you buy this dip? Are you waiting for lower prices? Are we going to fill the Bitcoin CME Futures Gap? We have a lot of charts we're going to cover today. Everybody hit that like button, hit that subscribe button, ding the bell. Let me know you're in here. Roll call before this stream goes live. I want to see everybody commenting in the live chat right now. Throw a 1 in chat if you're ready to get it going. What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream. We got to talk about what is going on in these charts. Markets are breaking down. I'm going to show you the exact levels that we need to be looking at. I'm going to give you a couple indications as to why it broke down, even though we don't need that when we're trading and investing. But let's be honest, this is a psychological game. We want to know what's going on and why, and we will cover that here on this stream. I want to just ask everybody, as you roll in right now, we need to hit that like button, pump up this market, hit that subscribe button, look below this video right now. If it does not say subscribed, hit that subscribe button, ding that bell. We're going to talk about what's going on here in the market because there were signals, signs, things telegraphing in this chart that was telling us exactly what was happening in this market. And so it's what we want to talk about. The number one thing I really want to pay attention to that I've really been trying to drive home here is this yellow line here on the BitLab trading stack. This is the weekly VWAP. And when we are below it, especially when we break below it like we have right here, once we come back into it, we're getting rejected, come back into it, rejected, come back into it, rejected. And in this case, we rejected quite stiffly. So we have to pay attention to, even right here, I guarantee you there's some people that got wrecked on this move right here with this move to the downside. Oh, we're rebounding, it's done. Only to, at this current juncture, we have not confirmed this move to the upside. We need to make sure that we can form a higher low at this level right here. And ultimately, ultimately what we're looking to is this level right here, 68,127. This is the weekly VWAP. And when we are below it, we regularly can come back and test this and still get rejected lower. But we have some levels that we need to watch, not only on the Bitcoin price, but this level. Remember, I'm just going to zoom out on this for a second. That's a 24-minute chart. I just want you to realize if we turn off everything on the charts and the lines and the indicators and just look at the price action itself, what does this look like to you? If we were looking at this on a 5-minute chart, we wouldn't call this a dump. We'd call this, oh, this is forming a pattern. And to me, it looks like a bullish continuation pattern. Doesn't mean it has to play out. We could come much lower than this. If we look at the chart levels that we've had outlined on this chart for the better part of a couple weeks now, but I even outlined this specifically yesterday, watching this bar, this sort of zone that we had outlined right in here, and didn't feel like it yesterday. Everybody wanted this to be a consolidation and then a continuation to the upside, but I was pointing out, and it felt like I was being a bear. You're not a bull or a bear when you're an effective trader in this market. What you are is somebody that's looking to see what the data is suggesting is likely to happen. I was pointing out, as bullish as we all want to be, I was pointing out this level down here in the 64 to 66K region as well. Ultimately, yes, it's still on the chart because it's still something, and it's something we will always need to pay attention to. That is this short-term holder cost basis. I have shown you this many times, and I will show this to you again just so we can all remind ourselves how important this is. If we come down here to the short-term holder cost basis and look, just remind ourselves what this looks like in previous cycles and how important this dotted line is. When I show you on the chart, this area right here, I put this on the chart based on this data signal right here. Why do I care about this number so much? Because when you look at the previous price action in past cycles, we can see when we are under the short-term holder cost basis, similar to kind of how I'm using on a shorter, smaller time frame, the weekly VWAP. They're two totally different metrics, but they provide a similar sort of context. When you're above it, you're very bullish. When you're below it, you're very bearish. In this case, see how we broke through it. Support. We come back to the short-term holder cost basis. We rode it along here, pushed up into the halving, sold off where? Into the short-term holder cost basis, pushed up, came back to the short-term holder cost basis, came back, etc. Back to it. Right here, back to it. A little deviation below. Wonder if we'll get a deviation again. But as it stands right now, this is that area zoomed in. This is a short. We could turn off all the other lines if it gets a little confusing. And look, just at the short-term holder cost basis, it's right here at 57,576. What is the short-term holder cost basis? Why the hell do I keep bringing it up? It is the average price of every Bitcoin that's in circulation that has been bought, traded, moved. I don't mean moved from my wallet to my other wallet. I mean like moved from one holder to another holder. Every coin that's been held for less than 155 days. Coins that are held for less than 155 days are thought of, considered to be much higher risk of volatility, moving when small movements in the price action happens, because it's either somebody that's a trader that's actively trading that volatility, or it's somebody that's buying and that does not have conviction. This is why when we come back over to this chart right here on my Twitter, these hype cycle buyers with no conviction. This is why you have strong bullish momentum to the upside. And then as the stronger players de-risk, and we can see this all play out specifically in these charts. We'll come back to this chart in a second. I just want to show you right here. All right, so we can see very strong, large holders. If we zoom in right here, this is a previous market all-time high. It comes right in here. What do we see? We see the large wallet addresses selling into the strength of the bull trend. What does this mean? They're de-risking. They're hedging. They're getting out of the market. They're trading. They're transacting some of their Bitcoin for something else into the strength of this trend. And who's buying? If they're selling, that means somebody's buying. And the people that are buying when you're above previous all-time highs, they're buying the hype. They do not have conviction. And the more short-term holders you have in the market, the weaker that price level becomes. We can also see this right here. If we zoom in, this is when we broke previous all-time high. We had a little bit of sell-off, but then a lot of still strong conviction with those 1,000 plus Bitcoin. But look at where this really delevers right here. And this is where we get this rounding top. We get the lower low, lower high breakdown. This is also coincides with where the Chinese mining ban was. Now, if we come over here, if we look at the addresses with over 10,000 Bitcoin, and if I've shared this with you before, great, hear it again. If you've never heard this before, I hope this can help illuminate market moves. This is why I love on-chain data. Yes, I get in the 15-minute chart, I get in the hour chart, I get in the 4-hour chart to trade, but I want to look to the data, because the data in on-chain gives me an idea of what smart market players are doing, and also the strength of a price level. If price levels are falling precipitously, they're just going down. I cannot believe it's going so low. And I start seeing a huge spike in liquidity in the market. I start seeing smart money buying at a level. And we see the short-term holder. If we come back over here, actually, let's go to it. If we come over here to the reserve risk right here is, look at this. It's the price divided by the HODL bank, basically divided by the strength of the market. When you see this get very low down here, this means a lot of those short-term holders they've exhausted. They have now sold. And who's buying? Who's buying when price is very scary and red? Smart money. So this is why down here, this is called, the risk metric. You're basically asymmetric risk opportunity when this is very low, and you get very overheated when this is very high. Why is this overheated? Because there's nearly no long-term hold. The long-term holders, the ratio has moved. They've been taking profits into those short-term holders holding at these market cycle peaks. Okay, and so when we see this sort of action, the wallets with over 10,000, look, starting to take profits at this specific point. And what is this? Previous all-time high. De-risking into the market trend. Now, where we're at right now, of course, we have a long way to go to what I think is going to be a market cycle top. What we're doing right now is we're chopping out this price action, and we broke it down again yesterday, but we got to do this until we actually break through, and that is this level right here. This is that previous level that we're currently at when you compare market cycle trends. We're pushing up. Let's not look at the halving. Let's not look at on-chain data. Let's look at the price action. And what the price action did once it got to that previous all-time high level. Previous all-time high level is this blue line. As you can see right here, we can actually move this down just a touch. You can see the price action pushed up, rejected off it a few times. Yes, this cycle, we kind of overshot the mark a little bit. We have a lot more capital flow coming in. There's a lot of excitement in the market, and there's a general acceptance that's growing at a rate that we've never seen before, with the capital to back up that acceptance, meaning BlackRock, Fidelity, Van Eck, etc. We have so much money moving in the market. Remember, on the interview that I did on Saturday with Mark Yusko, he told us there's only been up to somewhere between, $250 to $300 billion in the total history of Bitcoin from its inception. Only about $300 billion has moved into Bitcoin. Well, how the hell is the market cap 1.4 trillion? Because you get a multiplier effect as demand comes in and supply, it drives the price up. This is what that supply demand dynamic is. And so in that under $300 billion that has entered the market over the last 15 years, about 85 to 90 something billion of that has entered in the last 6 or 7 months. So we already have this exponential factor happening, and the price is not seeing it yet. But the fact that we are sustaining at a very similar level, yes, we are overshot it. When we look at the previous all-time high, that's this bar right here. Let's see where we're at right now. Man, it's not like it's that far off. Regionally, we're doing the same thing. We are this is that zone right here. This is that previous all-time high. As you can see, 2 previous all-time highs. We are in this same zone, consolidating much like we did in I don't even remember the date of that. When was this? This was November to December 2020. And this was roughly about 31 days. We are still not only in the same price region of this interaction right now, similarly on the chart, we're also within that same time frame. Currently, it's been from down here when we initially rejected. We're still within that basically 34 days. If we take it from right here and move this over just a touch, either way, it seems like all this is butting up to make the perfect storm coming into about when the halving is. Now, when we look at the price action for where we're at right now, this is scary, right? It's scary if you don't have a map. We have a map on this. Let's get down to it. Let's get down to brass tacks, 1 hour chart. Let's look at the levels. These are the levels we've had marked out here on the charts. I've been sharing them with you here on the daily basis. So my question for you right now is, if you like this kind of content, hit that like button, subscribe, follow us here. We're here Monday through Friday, 11:45 a.m. Eastern time. And you can watch us anytime after that as well. I'm doing afternoon streams on Monday, doing the micro cap and meme coins. I'm doing the interview things on Saturday. We have the BitLab Discord. You're welcome to join in there. But we are breaking this down for you, giving you an idea of exactly what the layout is for where price action is likely to interact with. Now, we pushed up. We had a triple top here coming into this 71.5 sort of range. And once we got this move right here, this was a signal that we were very likely coming down. Why? Because this goes back to what we were talking about. Even when we look at this macro picture, price action, lower high. High. We have a high, higher low, higher low, higher low, higher low, higher low. What do we have here? Lower high, followed by a lower low, followed by a lower high. This lower low isn't the signal. It's the setup. The lower high is a signal. So when we come back over here, this is a macro. The same things play out on the micro too. So we have a low, higher low, higher low, higher low, higher low, higher low, higher low, lower high. Sorry, lower low, followed by a lower high. So this was signaling that weakness. This was telegraphing it. The foundation was set for bearishness on this small time frame, on this 1 hour chart, 4 hour chart that we're looking at in the short term. When this breaks down and then this isn't a trap because the bulls cannot take it higher. In this case right here, this was signaling lower price action. And then we have to remember, last week set us up for this CME Futures Gap that we're only now exploring into. Up here, it's like, okay, maybe we're going to ignore it. Maybe we're going to ignore it. We can't forget the historical context of how often these CME futures gaps basically get filled. Now, to look at this is a futures market, right? CME futures. If you want to pull this up, click on your chart and just type in BTC1 If nothing pops up, make sure you're either right here on all or futures, because it's not going to be in this crypto window. It's going to be in futures, because this is traded in the traditional market. This is as the traditional traders betting on the basically the price of Bitcoin and where it's going to go up or down. So this gives us a sort of a somewhat deeper context about what the markets are thinking about where the price is going to go. So what happens is, because this is traded on the futures market, this closes on Friday. You see how this down here? This is where your dates are, wherever my mouse is. So this is Friday. And then what does this say? Sunday. So we have a gap here from where the market, because of the price action moved. Yes, Bitcoin is open 24 hours. Crypto's open 24 hours. But the futures are only open on the traditional time blocks. So when it closes on Friday and Bitcoin has moved over the weekend up from where it closed on Friday, then you end up getting this gap. And these tend to get filled. This is that area that even in this zone, it's looking like, I mean, you can see it clearly here. Look, higher low, lower low, lower high, down. So we're in process of filling this gap. Now, will this be enough? I mean, we haven't really filled it yet. We need to have some sort of wick or something come all the way down here to basically 64,300 in this region. But as it stands right now, if this did reverse out of here, I would be satisfied with this. Things have been leaning on the more bullish side, but this does indicate that we still have the possibility of a little bit lower down. And we can see this playing out on the charts as we speak. It's currently breaking down. Let's get down to the 15-minute chart and see what's going on. Now, when we pull this up and we use our indicators, look at how far below the weekly VWAP we are. At some point, even if we don't break through this, at some point, this price action is going to need to come back up, and will likely come back up and test that. That will be the deciding factor. Is the market ready to go bullish? Is the market going to basically continue to play a negative spread? As we stand right now on the 15-minute chart, still negative money flow. We still have the stochastics rolling over to the downside. The VWAP here on the trend fuel on the BitLab trading stack rolling over to the downside. A lot of bearishness here on this dashboard. Just gives you a quick look at how bullish or bearish the signals are together on this chart. So, you know, the VWAP, stochastics, RSI. Can't remember what this one is. And then you have momentum, money flow, etc. But as it stands right now, we got a couple things lining up potentially to happen here. If we lose this level right here, basically 64.5, we lose 64.5, then I think it's likely that we're going to end up testing this neckline that we haven't really tested yet, which would basically put us out. Let's do one more line here. Copy, paste, put this down. This would be testing down into the 63,146. If we came down to this level, does it frighten you? Does it scare you? None of these things should acknowledge the feelings you have. But if you're acting in this market based on those feelings, you are literally only going to be donating your money to somebody else. This is telling us, because we have the roadmap laid out, if this comes down here, great. If we lose this, we know the next level to watch to. I'm not taking shorts in this market right now because the market can reverse at any time. And when it does, it will likely do it very fiercely. There's a possibility here, if we turn off all these indicators, there's a possibility here that we have this halving only, feels like a few days away now. It's about 3 weeks, but in about 18 days, we have this halving. There is a possibility that we dump into this and then launch. There's also a possibility that we basically just range here, you know, maybe a little wash out to the downside, then launch. There's a possibility that, you know, maybe this is it. We find a bottom somewhere in here, push up, chop a little sideways, and then launch from there. There's no way to know what's going to happen because there's so much going on. Let's go through some of those things right now and make sure if you like this kind of content, you hit that like button. And, you know, I only ask. I don't really care if you guys hit the like button. It lets YouTube know you like the content, and it helps supporting. It's the easiest way to help support not only me, but crypto, because it lets YouTube know you like crypto content, and it pushes this out to more people. So coming over here, I talked about this yesterday. I shared this. Remember, it's all about shaping the narrative, not informing you all. Expect some chop. I posted this yesterday, about 24 hours ago, just after noon yesterday, and we could see, look at how many Fed speakers that are going to be this week. There's Fed Cook on the first. We had Bowman, Williams, Mester, Daly, all today. And then Bowman again on the 3rd, and then Goolsby. Every time these Fed speakers speak, especially with where the monetary policy is right now and everybody wondering when the rate cuts are going to happen, etc., this is charging the market with volatility, trying to catch the move. If something's negative said, if somebody read too much into the tonality. The reason I bring this up, I'm not going to trade on this news. This gives me some context as to some of the choppiness in the market. Because things can flip on a dime. And understanding that based on all these things, this is the Dixie, DXY, the dollar index, how strong the dollar is. Depending on what direction the dollar moves, that is a signal for where risk is moving in the market. If the dollar's going up, feels good, right? If you're a US citizen, it's great. Well, actually, when the dollar goes up, it tends to have a depressive effect on the asset market that you're trading, especially something like Bitcoin. Now, if you're trading, things that are not considered risk assets, then it maybe can move in tandem with that, like when people move into gold, etc. But when the dollar is moving up, it tends to be a vacuum for liquidity, and by way of putting somewhat of I don't want to say downward pressure. It kind of throws water on the bulls and the ability to really push the market up if the dollar is performing well. So we'd like to see the dollar sort of break down from here, and I have that charted here as well. This is what we're looking at right in the zone. So we have this kind of bizarre formation here. You could call it a symmetrical triangle. You could call it whatever you want. This is looking like it wants to reverse, but then no, it doesn't. I think eventually this will, I hope the dollar doesn't go all the way up here to 106, because that would mean for probably quite a bit more work for the Bitcoin market and the crypto market in general to do. But if we are able to reverse here, come back down and lose this, that will be a further signal for what we're seeing on what's happening in the market. Now, next thing here, okay, is Saylor scared? No, he tweeted as early, late as this morning, still betting on the future. He's not worried about this price drop. He's buying regardless of where price is. We talked about the CME, the short-term holder cost basis, but let's go over here and take a look a little bit at the ETF tracker, because we did get a little bit of the wind taken out of our sails yesterday, where on Thursday last week, we had plus 2,400 Bitcoin basically added. Even with the 1,500 outflow from GBTC, cumulatively with all the other ETFs, we ended up being plus 2,400 Bitcoin, AKA buying pressure on the market. Yesterday, it ended up coming back and having, huge outflow from Grayscale. Actually, surprisingly, it was only minus 1,500 on Thursday, minus 4,300 on Monday. Ultimately, even with the almost 2,400 Bitcoin bought from BlackRock, these two, all these numbers added up, ended up being basically a negative 1,200. So a little bit of selling pressure on the market. Now, remember where we're at. We are still incredibly in a good position in terms of where we're at. We're hovering around previous all-time highs. In fact, breaking through and creating a new all-time high, still hovering regionally in the same area. We haven't even gotten to the halving. When we look back over, let's do it. We got to do it. When we look back over to where we're at right here, this was the last halving. Look at how far after the last halving it took before we got into the next all-time high. Almost 200, let's see, we got there about 189 days after the last halving. So yes, you can say in some ways, this time is different on this context alone. In order for this to have matched in some sort of similar regard, this would have meant that this $70,000 region would have been in October of this year. We did this in February into March. We are months ahead of schedule if you're looking at it to the halving. But sometimes we throw too much data at ourselves. We say it's a halving, it's a liquidity, it's a Dixie, well, let's just calm down, take a chill pill, and say, what is it looking like with where we're looking right now? We have these two levels that we're watching. We've broken through this one, come down to this next level. Well, the next level down, which is these candle body bounces, we can actually drag this over just a little bit. We had this shelf right here where this bounced, this bounced, this bounced, this bounced. And we also have this diagonal level of previous resistance. We're hoping that this will be support. If this comes down into this region, then that's what we're watching. What I'm ultimately watching right now, though, more specifically, is what happens if this does wick down to this level. Will this immediately flip some bullishness into the market and bounce out of here? We're going to be watching this like a hawk because, you know, things can switch on a dime. Now, where is price going? Well, let's look to the data and see what the data is saying about what the setup is. This is the liquidation levels on the high block. And what I want you to notice is how deep this is right here. This is minus, where are we at right now? This is minus 500,000 minus 600. Let me actually come right here. Additional filters, max liquidity, boom, apply. There we go. Max liquidity. So this is minus 15. It was minus 17 over here. Yeah. So minus 15 billion, showing that things are getting a little exuberant to the downside. And this windshield wiper right here, showing the level that the price is at, has come down and flushed all the way down here. Yes, we still have a bit of a pocket right below us. And remember, we also have that CME Futures gap that suggests that there still could be a little bit more downside price action. And this basically is roughly, yeah, we can see this is roughly 64.5 down into the 63.6, about $1,000 range directly below us, with all of this brightness right here with the liquidation levels that theoretically could be right below us. Now, when we're looking at this, this is quite low. And when this gets this deep, it starts getting to the point where a reversal, at least in the short term, is likely in order, and then basically flushing out people committing short. Because you see all this right here, these are the different suggested levels that people could be liquidated if they went short, if this price action starts moving to the upside. So when we kind of tie these two things together, when we're looking at this liquidation heat map, we don't really, we don't really have that much color below us. We have this one little nodule right here at 65.7, but really on this, we're looking at the 12-hour here. We can see that really the hot zones are above us, getting back once we get up here into the 66.3 into 66.4 sort of zone. So there's some contentious levels on the chart right now. When we look at liquidation levels, this starts getting confusing when you're tying all this together, but let's just look at it. We had this large impulse to the upside, consolidation, reversal pattern. Why? Triple top. Triple tops tend to reverse to the downside. We had this signal right here where this broke down with a new low, followed by a new lower high, and then this telegraph to the downside. We are in a zone right now that theoretically could be a wonderful area to reverse. So we want to look for signals if that reversal is in play. Currently on the 2-hour, we have negative money flow, stochastics angle down, but the RSI does look like it's come all the way down, and it's trying to do some work here. So let's get down to a little bit smaller time frame. And if we could, if Bitcoin buyers could not only defend this level, but send this higher, we already have a little bit of a higher low here on this small time frame. If the price action can work its way up and take out this zone right here, which is essentially 66 to 64, this high here, the reason I put it there is because you can see this is also a bounce here, support here, rejection here, rejection here. If the price action can get back up in this level and take this out, that's the first step in the bullish diaries for what we would want to see happen. Let's see. Yeah, we got 295 people in the room. Everybody hit that like button if you want this market to go up. I'm ready for the super exuberance with the markets just doing $5,000, $8,000 candles every day. You know what I mean? And I know it's coming. But right now, we just have to mind our P's and Q's and not get chopped out because we're so worried about every direction the price is going to go. As it stands right now, this is the level we're defending to the downside, 64,567. This is on the small time frame. If we lose that, then I think we are going to fully go down and close the gap and test this level. This would be a beautiful level for the price to come down to, because if we bounce down here and found support in the 63.1 to 63.3 level, we would be really confirming this previous resistance as support. We'd be closing that CME futures gap, and we would want to see at this point, when this does bounce, we'd want to see a pretty fierce conviction with money flow coming back in. We'd want to see high volume, etc. If this comes down and bounces here and there's very low volume, it likely will be a failed bounce and will continue down to test that short-term holder cost basis down here in this 57.5. Now we got to look at Ethereum. Ethereum, I pointed these, I did not move this. This is the first time I've opened the Ethereum chart today. Okay. We had this level marked. Why do we have this level marked? Because all this price interactivity right in here, this bounce, this rejection, and you can see these levels. Basically, there's a lot of chop right in at this price level. And the price action, look, bounced on this initially. This is Ethereum. Bounced on this initially, came up. So we have the lower low, lower high, continuation. Look at this. He even tried to come up here and got rejected back down again. And this is a level that I've been showing for 6 months or more now, talking about this rising channel that Ethereum has been in or is broken out of, but rejection. And the reason why this is here is because when you see this, price action comes down and finds support. And then when you come over into this zone, you see this is where it rejects. Now the price action did come down and bounce once, confirm this as support, but now we have a much lower high. This was rounding. We had a rising wedge, multiple bearish signals here that was telegraphing likely move to the downside. And then what we did, we broke out bearish out of this, much like these rising wedges typically do. We came up, touched this. We have these two doji candles right here. See this? Boom, boom. Bullish momentum, indifferent momentum. That's a switch. That's a switch in conviction there. So if you're coming up to a known level of previous support, and we're coming up to this with strong bullish momentum on this candle, but then immediately get neutral candles, that's saying, oh, this might actually be flipped to resistance. That's what these SR flips are. That's what we're talking about. Flipping resistance to support or flipping support to resistance. In this case, this was support. Now, bullish candle, neutral candles, we're getting that SR flip. Now this is resistance. And then we start breaking down. And in doing so, we created this trend line through here that rejected from fake out. It's just doing everything it can to chop you out ultimately, and then giving this M formation breakdown. And now we're testing back into this zone that we have marked out. We can actually make this a little higher, about 3186, 3200. We are testing the resolve of every single person in the market. Even if you've been in this market for 7-8 years like I have, it doesn't change the fact that on a daily basis, you question your instinct. You question your analysis. This is why it's so important that you go out there and you watch people like me. You watch Frankie Candles. You watch Jason Casper. You watch Crypto Face. You watch Tom Crown, Altcoin Daily, Discover Crypto, and you gain little nuggets of information. And some of it you'll agree with, some of it you'll hate. Some of it you'll entirely disagree with, but it is important that you get different views on the market, looking at different types of data points, because one, you learn about this market. Two, you learn what works for you. And three, you're able to also not just be in a bubble of everybody saying the same thing about the same direction, because that's how a lot of people get wrecked. I want to watch people that challenge my idea of what I think is happening. One of the people, I'm not saying he does this, but one of the people that I learned a lot from, and I absolutely love, Eric Crown's Crypto Cave. He breaks down things on such a technical level. And I love tuning in to see, okay, I know what my thesis is on the market. What's Crown saying? Okay, let me go check out what, everybody's learning from each other and we're growing together. And I want you all to succeed in this market. Let's go ahead and look at a couple more things here. Solana, what are we doing here? Solana didn't feel like, remember over here, I was talking about this 179. Didn't think that we're going to hit that again, but we had this blocked out in case we did. And I talked about this about 3 or 4 days ago about the price action likely coming down into this 178 region. We've come right into it. The next level down is going to be down here at the bottom side of this zone, 169. So some people felt like they missed the move because it's but here is, I want to say this to you. The market's dropping. If you're frustrated, then you're not going to be aware of the opportunities that are presenting. If you feel like you missed some of these coins, Solana, AVAX, Cardano, Chainlink, any of these that have pumped and then get frustrated when they're having a little bit of a correction, then you are ignoring that you have a right to make money in this market, but you are choosing not to do things that will make you huge gains in this market. And that is buying when there's blood in the streets. Right now, we're having a market dump The opportunities here, if you have your map set, if you have your level set on these charts, if you have a strategy in place, you're absolutely going to crush it in this market. And I hope you do. And I hope you follow us for more so we can make sure that we all win together, because I want you to succeed. I want to succeed. And I want us to share knowledge and tools and resources together so we can all dominate in this 2024, 2025 bull run. So let's talk about it. Solana, rip, absolutely ripped. It's going to go to 1,000. Some people had this target right here. I'm just going to point this out. And I even outlined this for you all. This target right here. Let's go here, option T from the top to the bottom. Let's go ahead and see what that target is. It's going, see, we already had it marked out. 1,500. If you're only looking at this target, ignoring what the market caps are doing, ignoring the tokenomics, ignoring all the data points beyond just this bullish target that you see that could happen, it doesn't mean it has to, then you're ignoring the fact that on the 2-hour chart or the 4-hour chart, you're ignoring the fact that as we came into this level, here's a high, here's a high. Well, let's look at where, let's go ahead and look right here. Okay, the RSI was looking good, but look right here, momentum, option T, from this level to this level, this is a lower high on momentum. We also see right here, this is roughly the same two highs on the RSI. And let's go ahead and see where we're at right here. So this was a huge momentum wave here. Look how much higher the price is here. And the momentum wave is a bit smaller. So we're already seeing some weakness coming into this level. And then what did we get? I just talked about it a second ago. The drop in price where we have higher lows all the way through until we get this low right here. This low right here, followed by a lower high, was signaling weakness in the market. And then, yeah, we consolidated sideways. There was a lot of the meme coin craze. There's a lot of things buoying the market at this point. But then in so doing, what did we create? A rising wedge, bearish pattern. What do we get? A breakdown, retest, confirmation, breakdown. Now, it would be great for all the market, for Solana, Cardano, AVAX, Render, Near, Matic, everything we're holding. It'd be great if this was the bottom. But we have to be prepared if it's not, because we know on the macro scale, looking at this market, understanding that, yes, we got a little overheated here, but understanding these halvings correlate very strongly with, yes, somewhat being in the, already, we've had about a third of the bull market coming up to it, right? About a third of the bull market coming up to it. About, I mean, a full bull market and bear market, you know, little mini market cycle coming into this, and then the explosive gains. We are more likely than not going to have incredible gains coming our way for everybody that is prepared to be patient. Do you understand that? So many people are going to get wrecked in this market, but those that are prepared, not only with levels on their chart, but prepared to be patient. Sometimes the best trade, the best move is no move at all. Sit on your hands. Educate yourself. Sometimes the most bullish thing you can do is go and learn about different things in the market. Learn about market cycles. Learn about trading strategies. Get in a community like BitLab Academy. Share ideas. Share charts. We have a member stream this afternoon in the BitLab Academy Premium Discord. I'd love you to be there. But what I really want you to do is be prepared with strategy and levels, but also be prepared sometimes to quiet your mind. Be patient and let the moves come to you. So with that being said, I do want to point out we do have a BitLab member stream this afternoon for the BitLab Academy members here. Just come into the page, 2 events, come right here, hit that interested button right there. Join us here. It's going to be at 4 p.m. today. Joshua, Jake, and I are going to be doing that. If you want to join and get in, we're under the previous all-time high. So the deal's still going. lab.bitlabacademy.com/Josh. I'm putting it in the 30-day free premium. I'm putting it in the live chat right there. Again, it is lab.bitlabacademy.com/Josh, just like this. lab.bitlabacademy.com/Josh. The link is in the live description right there. I love you guys. I appreciate you all. Hope you all have an absolutely wonderful day. The markets are setting up right now. Remember, there's going to be so many washouts to the upside and to the downside. Sometimes you're going to catch them. Sometimes you're going to miss them. Sometimes you're going to get wrecked. This is why we use risk management. This is why We are patient and let the trades come to us. And if you know, I'm breaking these things down on a daily basis, not only here on the BitLab Academy stream, but also on Discover Crypto on the TA section of that show, and way more in depth and way more often on the in the BitLab members area for the BitLab Academy. And if you want to learn more, also, by the way, you can sign up for the courses as well, where we break everything down. And I just want to shout out, if you do sign up for that lab.bitlabacademy.com/Josh, if you sign up there, do me a favor. 1 or 2 of the confirmation emails might go to your spam folder. Please check your inbox and your spam and junk folder. There's 2 very simple steps that if you do those 2 steps, it will automatically add that premium access to your Discord. If you have issues, you're more than welcome to email me at help@bitlabacademy.com. I love you guys. I appreciate you. I got to run. I got some stuff I got to take care of, and we got the member stream this afternoon. Everybody, let me know right now. Are you buying or selling today? Or are you sitting on your hands? That's all I got. I'll see you in the next video. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Adios, muchachos. Thank you for being here.